Hello everyone, today I'm going to be talking about CCIV stock and Lucid Motors. But before we get started, just give me a favor and subscribe to the channel, and without further ado, let's get started. In the recent NASDAQ correction that we saw a couple of weeks ago, it didn't take time for Churchill Capital, CCIV stocks and also other electrical vehicle stocks to correct from nearly $65 to lows around $20. CCIV stock did bounce back strongly from the intraday lows of March 5th and currently trades around $29 per share. These days, anything related to electrical vehicles seems exciting, as we are seeing right now what is happening with NIO and Tesla. However, they believe that there will be a better entry point into CCIV stock, because they are believing that CCIV stock right now, it is a little bit overvalued. At a current valuation of $47 billion, the stock still looks expensive as compared to peers. Of course, the company's market position seems attractive and there is a big addressable market over the next decade. But first, let's talk about valuation. The compilation shows that Tesla is currently traded at 10.4 times EV financial year 2022 sales. NIO as well trades at 8.6 times EV financial year 2022 sales. However, CCIV stock is traded at 19 times EV financial year 2022 sales, which is absolutely overvalued. Even at a current valuations, investors remain bullish on electrical vehicle stocks. The key reason is the projected growth over the next decade, because the futures is absolutely for the EVs. There's no doubt about that. Therefore, be it Tesla, NIO, or Lucid Motors, the basis of the bull story is EV sales being at an inflection point. So, let's talk about two estimates. Bloomberg projects that EV sales will increase from 1.7 million units in fiscal year 2020 to 26 million units in financial year 2030, and further to 54 million units by financial year 2040. Deloitte expects 11.2 million EV sales in financial year 2025 and 31.1 million units by financial year 2030. But you have to be careful about one thing. Any factor that negatively impacts these estimates will result in a reassessment of the bull story and downward adjustment to valuations. For now, the tailwind seems intact and everything is just fine with the EV stocks. Lucid Motors seems well positioned to benefit from the increasing adoption of the EVs. The company is positioning itself as a provider of luxury electric vehicles. The company's first model, Lucid Air Dream Edition, priced at $169,000, has already been fully reserved. Lucid differentiates itself from Tesla in terms of battery efficiency. Lucid Air is expected to have a range of 517 miles as compared to 412 miles for Tesla Model S. So there is a little bit of advantage that we see over here in terms of battery efficiency for Lucid over Tesla. Coming back to the pricing, Lucid Pure is priced at $69,000. Its Touring and Grand Touring are priced at $87,000 and $131,000 respectively. The base price is attractive considering the company's positioning in the luxury market. In terms of the revenue outlook, the company expects to generate revenue of $2.2 billion in financial year 2022. Revenue is expected at $5.5 billion in financial year 2023. A key reason for the expected revenue surge is Project Gravity. This will be the company's first luxury SUV. Lucid Motors expected revenue of $22.7 billion in revenue by the financial year 2026. However, to talk about this early stuff and to jump to financial year 2020, it is a little bit early. That's it. This is the end of the video. Hope you enjoy. If you did, please subscribe and leave a comment. Until the next time, see you next, guys.